What's up, ladies and gentlemen? This is WFX back again with another daily analysis video. And in today's video, I'm gonna go over again of my analysis of what I'm looking for today. And I'm also gonna catch up with the trade that we took yesterday in my signals group and personally myself, uh, which I talked about in the previous video yesterday. So if you haven't watched that video, I really recommend to watch that video so you can have a grasp and understanding of what kind of levels I'm looking at and what was my analysis on this particular trade that you see on your and my screens right here. A beautiful, beautiful, beautiful trade that I can say. So now, once again, every daily video, I'm gonna start with very high time frame. I talked about yesterday, but I want for all the new people to understand what particularly I'm looking at, and these are some very, very, very key things that is important in this analysis. So starting off monthly, we have a big, big monthly support right here on the monthly time frame. So even though you see that this price is below this level, that doesn't mean that this level is not being respected just yet, because we are on the monthly time frame and we still have 7 days and 12 hours for this monthly candle to close. So I really see this monthly candle ending up respecting this level and close with a nice little wick on the bottom. And I'm gonna explain why when I look at lower time frames. I have some really interesting points that I want to make. So this is the level. Now I'm gonna delete this because I like to keep my charts clean. I don't wanna have this big box in front of my screen, but I want everyone to keep that in mind, that we have this monthly support here. Now dropping down to the weekly, this is where it gets interesting. Now let me open this up really quick. Here we have this very important box right here. Now this is a data of weekly candle closures in a row. So here on this screen you can see 1, 2, 3, 4, 5, 6, 7 weekly candle closures in a row. Now let's get back on this table. As you can see, the first time it happened, it was 1953. 1970s we had 8, 1987 8, and in 2022 is to be determined, but this is historical data. And as you can see, every time that happened, we had 7 or 8. After 1 month, we had +6, +10, +12, +15% return. After 3 months, we had +10, +12, +25, +14% returns after this historical moment happens. So now in the current moment, we're sitting where we have 7 weekly candle closures in a row. So I want everyone to keep that in mind, and this is another great confirmation, not just a monthly support, but also the 7 weekly candle closures in a row. Even though if this next weekly candle closes bearish, which I don't think is gonna happen, it might, but I don't think it's very likely, I see the market pulling back. And now I'm gonna delete this, get this off the chart, and continue my analysis. So now we have some interesting levels on the weekly. We have this support that was broken, this lower low, but was never retested. So this is a great time for the market after these historical moments for the price to retrace and retest this level. 2 potential scenarios: we retest this level, we continue to the downside, that's okay, we're going to short the markets. Second scenario, the price breaks this level, retests, form this inverse head and shoulders, and then continues to the upside. Now we don't care about that just now. What we care about is this move to the upside, and this is a weekly time frame. So this move to the upside can take 1, 2, 3, or 4 weeks, which can give us plenty of opportunities to go long in the markets. Now, that's my analysis on the weekly. Going down to the 4-hour time frame, we have some also interesting levels. As you can see on the 4-hour, the most interesting level, my 4-hour levels are gray color. So the key level that I'm looking at is this support right here. As you can see, it was respected here. We have nice little fake out, and I see potentially the price coming down to this level once again. And if it comes to this level, what's interesting is we have a potential inverse head and shoulders, which is another great reversal pattern. So now let's talk about our confirmations. Monthly support, 7 weekly candle closures in a row, historical moment, where after that, historically, the price ended up being in gain after 1 or 3 months. And now we have 4-hour inverse, potential inverse head and shoulders. So this is my analysis overall, giving to you of what is my bias towards the markets. Now, dropping down to the 30-minute time frame, I want to quickly catch up and talk about this trade that we took yesterday, the analysis that I talked in yesterday's daily analysis video. The price was somewhere around here, and I marked up this beautiful demand zone, and it's not just that, we also had a nice gap to fill. So New York opened, the price dropped down, we filled the gap, and let's go down to the lower time frame. Let's go down to the lower time frame, and I'm gonna show you what was the trigger to my entry. The price came down a lower time frame, and once we reached the bottom of this demand, we started to see instant rejection. So boom, we had one rejection, push to the upside, we came down once again, which formed a nice double bottom. The one that you see right here wasn't the entry, this was my entry. And what happened afterwards, the price just beautifully pushed up, hitting our first target 1-to-1. This trade was called out to my group. Then it hits our second target. Our second target was somewhere around here. I don't know, it's 1-to-2, 1-to-3. And our final target was 1-to-6. Now, once the price reached this point, it was also already 11 p.m. my time. So I don't really prefer holding trades over time. So what I did, I closed most of my partials, like 80% of my position. And I told to my group, I'm closing most of my position and leaving the rest running to, for the market to do what it wants. I set my stop loss to break even. What happens afterwards, we have a big drop over the session or Asian session overlap. And I got taken out. The rest of 20% of my position got taken out at break even right here. So now, theoretically, this trade is still open. The stop loss wasn't hit, but I was taken out. So I'm going to move this to the left, and we're going to talk about present. So we're back again at the bottom of this demand zone. As you can see, the price had an opportunity to push down. We did close below on the 30-minute time frame. We had an opportunity to push down to this lower zone that we have here for our support, but the price eventually started pushing up. So this is what we have at this current moment. The price is now currently back below. So once again, this gives me more confirmation that there's a high probability that the price is going to come down to this level, and only if it comes to this level and shows rejection and some patterns, then I'm going to be looking to go short, just like we did here on the 1 minute. We had a double bottom. So this is exactly what I'm going to be looking at. Now, another interesting point is if we drop down to the lower time frames, such as 3 minutes, we can see a nice double bottom, which formed below this 30-minute demand. And that's what caused the price to push up. Now, if these, some of the key market structure ends up being broken, then I'm not going to be waiting for the price to go all the way down, and I'm going to start scaling in and opening buy positions. Now we have some market structure here, some market structure here. So if the price breaks this, we're going to scale in and start looking to go long. Now, if the price eventually comes up, breaks the market structure, we take the long position and ends up dropping down, that's okay. We're gonna look for entries here. Our risk to reward is 1 to 3, 1 to 6. So taking a one loss is never something that breaks my heart. So that's exactly what I'm looking at. And very nice and simple. I really like how the market moves. I really like how the market respects the price action, respects the market structure. If we look to the left, we can see beautiful examples of shitty market conditions that were driven mostly by fundamentals. Now, even though we're in consolidation, I really like how the price respects, certain supply, support, and demand zones. And I really like how the market moves. So if you want to learn the way I trade, I like to keep it really simple. You can check the link in the description for my course. Or if you want to follow exact trades and exactly every single move that I make that considers trading, you can also follow the link in my description to my Telegram group. And that's basically what I have for today. And I'll see you all tomorrow. Peace.